And it's a midweek trade right here in Lagos, Nigeria. Here's what's coming up in the next 25 minutes. The reforms keep moving in Nigeria, and we gauge the latest one as President Tinubu signs the insurance industry bill into law. What next for insurance stocks? Also, consumer inflation in Ghana, that slowed more than anticipated in July, dropping to 12.1%. And the United States is to require visa bonds of up to $15,000 from Zambians and Malawians starting August 20th. It's great to have you join us. I'm Ladi Williams. Let's get a check on what's playing out with the markets that we track now. Let's start with oil. Yeah, we're seeing oil prices there. A big move up, 1.60%, but it's almost like we're always at the same place we started. Still below $70 per barrel. That's for Brent. So it's been trading with a band there, within a band, about 67, 68 to about $70 per barrel, 1.60% uptick there. That's what we're seeing this afternoon. WTI, that's the U.S. grade, that's up 1.67%, $66.25 a barrel there. And it's still the same sentiment driving oil at this time. We know both oil contracts, that fell more than 1%, about $1 on Tuesday. And that's to settle at the lowest level in 5 weeks, marking a fourth session of losses. So we're still seeing that trading band there holding tight. Let's get a check on the metals market now. We're seeing gold that's slipped slightly today, 0.40%. That's for spot gold. But U.S. gold futures, that's down bigger there, 0.40% down. Silver, that's the one that's slightly down by 1 basis point. $37.82. Then platinum, that's solidly in the green. There, 0.52%, $1,337 per ounce. And we see palladium, a big drop of 1.84% at $1,881 there per ounce. Let's get a check on other stories. Now we see at the Financing Africa Forward Summit in Johannesburg, Samaila Zuberi, that's the president and CEO of Africa Finance Corporation, is emphasized that Africa's most pivotal contribution to global energy transition lies in scaling production of critical minerals rather than focusing on reducing its comparatively minimal emissions footprint. He's saying that a striking imbalance in global energy access of roughly 680 million people without electricity worldwide, 570 million live in sub-Saharan Africa, underscoring the urgent need for investment in clean energy infrastructure alongside mineral development there. So he's calling for a shift of focus there when it comes to clean energy, seeing that Africa is a critical source there of minerals. And we see the U.S. Department of State today announced that citizens of Zambia and Malawi applying for B1 business or B2 tourist visas will be required to post a visa bond amount ranging from $5,000 to about $15,000 effective August 20th, 2025 under a 12-month pilot program aimed at reducing visa overstays and strengthening immigration compliance. The bonds sums are set to by the consular officers during the visa interview and will be refunded if travelers depart the U.S. within their authorized stay and comply with visa terms. However, overstays or immigration-related applications could result in forfeiture of the bond. Travelers must also enter and exit the U.S. via one of the 3 designated airports, that's the Boston, Logan, JFK, or Washington, those or risk entry denial or improperly recorded departure. All right, let's move on now to reserves there by most of the top African countries. We've seen the Central Bank of Egypt there. Figures from them showing that Egypt's net international reserves hit a new record at the end of July, reaching $49.03 billion, up from $48.7 billion recorded at the end of June. That's a growth of about $336 million. This marks the highest level ever recorded for Egypt's NIIRA and reflects continued momentum in the country's external financial position following the adoption of a flexible exchange rate regime in March 2024. So we've seen that sentiment continue there with their reserves building right there in Egypt. And we have good news from Ghana now. We see Ghana's inflation that's slowed more than anticipated in July. It's dropped to 12.1% year over year from 13.7% in June, below the median analyst forecast. That was about 12.4%. The deceleration reinforces growing consensus that the Bank of Ghana should pursue additional cuts to its benchmark policy rate, building on a historic 300 basis points reduction to 25% at the end of July. Headline inflation eased to its lowest level since December 2021, signaling sustained disinflationary trend. The data has bolstered confidence among policymakers and markets alike that further monetary easing is both possible and warranted despite lingering risk around core price pressures and external volatility. So we're seeing good news there. But on the flip side, meanwhile, we're seeing ShopRite Holdings, Africa's largest supermarket chain, has confirmed plans to exit the Ghanaian market, marking the end of over 2 decades of operating in the country. The company announced this week a binding offer received in June for 7 retail stores and 1 warehouse, and the sale has been classified as highly probable. This move is part of a broader strategy to consolidate operations and refocus on its South African home market following prior market exits in Nigeria, Kenya, Uganda, DRC, Madagascar, and most recently, Malawi, when an agreement to divest 5 stores is also underway pending regulatory approval. Yeah, so those are the top stories in Africa right now, but let's get a check on what's playing out with the markets on the continent. Let's start off with Africa there. We're seeing positive sentiment continuing on the African continent with the major bourses there still in positive territory, just like yesterday. We see the NGX definitely also still leading there, 0.55%. That's what we have at intraday. That's for the NGX All-Share Index. South Africa taking back that 100,000 level. That's for the All-Share Index for the Johannesburg Stock Exchange, 0.36% up there. So we're seeing that positivity continue. EGX 30 is not left out, 0.34%. Up at 35,374 points. And we see for the Nairobi Stock Exchange, closed yesterday in the green, 0.23% up, holding onto the 150 points level for the All-Share Index. All right, yeah, I did mention there that President Bola Tinubu was still seeing the reforms growing at this point. And the latest one, we have the Nigeria Insurance Industry Reform Bill for 2025. It's now an act, and definitely we've seen the impacts, so far when you're looking at sectoral performance. Let's look at the NGX Insurance counter there. Let's see how the index has grown so far. Yet to date, we've also seen some stocks there, some stocks listed there. That's insurance stocks. Some of them up over 100%. All right, see the index there, NGX Insurance Performance. Yet to date, that's up 50%, outperforming. That's the total all-share index at 1,051 points. Look at some stocks, insurance stocks listed there on the NGX. See the likes of NAM. According to investing.com, that's up 148% year to date. ICO, 71.60% year to date. Cornerstone, 57%. We see Mansard there, 28% up year to date. So we're seeing, good vibes when it comes to that financial services sector, especially for insurance. All right, let's bring in Omete Inko-Taria now. He's a chief consultant, Trinity Transnational Consulting, also the founder of Net Worth Investors Club. Joining me via Zoom. Great to have you on the show.
More glad for having me.
So, yes, we're seeing the reforms now. We're getting them back to back, at this point with, most industries targeted. And now we're seeing the insurance industry. Talk to me about how this elevated minimum capital requirement, we've seen 25 billion for non-life, 15 billion naira for life, 45 billion for reinsurers. How do you see that, affecting, smaller insurers' ability to raise funds and remain listed at this point? What are you seeing there?
Okay, first off, I want to point out the fact that it's long overdue this sort of reform in the Nigerian insurance industry. If you recall, the banking recapitalization exercise started last year, and I talked about a situation where the Nigerian insurance industry has really underperformed, especially on the stock exchange, and needed serious reforms, beginning with a recapitalization. So what we are seeing today is going to be very beneficial for the insurance industry as a whole, because if you recall, exchange rate, when the Naira experienced a serious devaluation from about 750 Naira to 1,600 Naira to a dollar, that automatically meant that the capital base of the insurance sector as a whole became too cheap and too weak, and of course the insurance business is all about being there to make sure that they make claims and make payments for insurance premiums. And should most of these insurance products, especially dollar-denominated insurance products, be due for premium payments, then most insurance companies will go under, based on the fact that their share capital was just too weak, too small to deal with the kind of businesses that they were involved in and insuring, especially in the oil and gas sector. So this reform has come in at a very good time. All I was thinking was, should the exercise kick off after the banking recapitalization exercise is concluded in April 2026, then there is a great chance for it to succeed. For smaller insurers, what we will see is a case of mergers and acquisitions, especially for those who may not be able to meet up the capital base as may be required by the reform. But the truth is, in the end, the Nigerian insurance space will be fortified to be able to compete even globally.
Do you think, with the recapitalization drive in the insurance industry, lead to, mergers and acquisition activity, or are you seeing a consolidation at this point? And how might that consolidate share value, into, would you think that would make more or fewer stronger players, at this point, we'll see more M&As, play out in the insurance industry?
Actually, it will make insurance stocks even more expensive before the exercise begins, because as we speak now, having gotten the news, the market has already swung into action, and all insurance stocks in the NGX already are on full bid, making the maximum gains per day. The Nigerian exchange does not permit any stock to gain more than 10% or lose more than 10% per day. So today's top gainers list, I expect to be dominated by the insurance companies, because you have some stocks that have bidded for up to 240 million shares, and there is no offer in the market right now. So that portends well for the share prices. And of course, those who are invested in insurance stocks, happy days are here.
Happy days for, I'm sure, investors that were able to get in early at this point. Following this news, how early do you think an investor should have, situated in the insurance stocks, before this news? Because we're already seeing most of them up over 140% yet to date for the likes of NEM Insurance there.
Well, as you can see, the demand has increased suddenly, and most insurance stockholders do not want to sell at all. You see a situation where a stock has bids for as much as 50 million and no offers, and at the end of the day, 2 hours into trading, only about 1 million shares have been traded, which means this rally is just about starting. And I saw you began with the NGX Insurance Index making 50% year to date already. All I can say is let the entire investing public get set, because that's just very little compared to what's going to happen going forward. Most of these insurance stocks have actually been underpriced for so long, and a whole lot of repricing is going to take place even before we start hearing about deals of M&As and all that.
So that means an investor now that's that doesn't have any skin right now in that sector still has a chance to getting, at these prices.
Yes, absolutely. Actually, what happens is I always advise investors, do not run after a flying stock because that will be akin to running after a moving train, and that's dangerous. So what happens is the demand will continue to build to an extent where those who actually put in trading funds on getting the news earlier than others will eventually want to start exiting such stocks. So in that case, what will happen is supplies will begin to come into the market, and then there will be a round of supplies where new entrants can now take position as long as you are going in with patient fund this time. Whenever supplies becomes available, then you are sure to also benefit. But for now, it's better to stay safe and wait for a pullback, even though it doesn't look like it's going to happen anytime soon.
Yeah, I guess a tough choice there for an investor to make at this time. You don't want to buy the top. At the same time, you don't want to miss the train. Looking at the NGX listed insurers, the likes of ICO, AXA Mansard, and Cornerstone, which one appears more resilient and attractive, post the reforms now, and which might struggle with the recapitalization timeline?
Okay, for those who are much more resilient, I would mention maybe the top three, and that's talking about custodian insurance, which is even more expensive than some tier one banks. That's a good one. And then you also have name insurance, which follows it, and it reflects even in their prices. You know, the market has a way of rewarding you for good performances, especially when it comes to creating value for shareholders. So you have custodian insurance, name insurance, Mansard insurance. These are amongst the top three, if not, if I'm not mistaken. And then some others who are still penny stocks right now, talking about Guinea Insurance, may struggle, but time shall tell because some of them actually are doing well, just that they are not well capitalized enough and have not been able to really create sufficient value in terms of dividend payout to shareholders. And so most of them have remained penny stocks and even under NIIRA for so long. But thanks to the happy days that are here now, all of that will change.
All right, definitely. We'll keep watching and tracking. At this point, it seems there's no stopping the stock markets. It just keeps going up. I've not seen a down day for a long time now. I don't know if you remember what it feels like to see red in the stock market in Nigeria.
Very, very rare, Ladi. We understand there is a saying in the stock market, and it's all over the world. I mean, not just in the NGX, but also in the foreign markets. There's a saying that goes this way: sell in May and go away. But for the first time in many years, May has brought in so many good tidings, and it's been a fantastic run for most Nigerian stocks. It began with a rally around January, February, which is normal. And then normally after dividend payments, we normally are supposed to have experienced a lull in the market. But here came May, and a lot of stocks were still jumping, especially the penny stocks. And after the penny stock jump came to an end, the blue chips on the NGX took up from there and have been running. And then, of course, we've got this insurance news, which has now made the insurance stocks the darlings of all stocks. Now, most traders are selling off some of their holdings in most of the blue chips to find a way to take position in the insurance stocks.
Right.
So
I guess at this point,
wonderful ride for the NGX this season.
Right, I guess at this point to stay in May. Thank you so much, Omete Inkotari, as the Chief Consultant, Trinity Transnational Consulting, founder, Net Worth Investors Club. Thank you so much for coming on today.
Thank you very much, Ladi. Appreciate it.
All right, let's get a quick check on the Middle East now. See, major Gulf markets are largely, flat today, modestly down amid subdued sentiment following weak PMI data and mixed earnings. See, Dubai, it's red, 0.29%, 6,148 points. Abu Dhabi, that's down 0.18% at 10,312 points. Other markets we track right there in the Middle East, we see the Tadawul there still staying up 0.18% at intraday. Qatari index 0.37% up, 11,325 points there. Let's look at the U.S. now. The stock futures, how looking at this point. We see it's still green. The NASDAQ just about 5 basis points up. That's for the futures. 23,142 points. The Dow Jones Industrial Average 0.36% up. S&P futures 0.23%. So we're still seeing strong sentiment there. We'll see if that continues at the close of trade in the U.S. And for Asia, also seeing sentiment there. Just yeah, that's India that's not getting the green at this point. But we'll see the Nikkei 0.60%. Hang Seng Index that closed 0.03% up, and the Kospi 0.14%. Flip over. We'll see what's happening there in India. We'll see it's red, 0.31%. The data are not looking so good there, 24,574 points. Let's take it on to Europe now. Let's find out what's playing out in Europe. We have Cassandra joining us now. Great to have you on the show. No, not Cassandra, actually, at this time, but great to have you. Please bring us up to speed on what's playing out with the markets now, Varda.
Hi, thanks for having me, Laddie. Yeah, European shares saw some gains today. As I just saw, you've been also outlining that stuff is in the green. It's also here. And news on the block is that investors are finally shrugging off this U.S. tariff threats and finally moving on. The impact of the U.S. jobs data is also reflected in the European markets. Now, according to a strategist from Bank of America, the European equity market is very, very sensitive to changes in the U.S. rates decisions. And the jobs data that came out recently lets on that maybe a cut is coming up. The pan-European stocks 600 started very strong today, gaining 0.2% this morning, but has stabilized at 0.08% gains. DAX is having a great morning, climbing to 0.3% this morning, eventually settling at 0.1% gains as when I checked last. But all is not rosy on the European continent. Switzerland's benchmark SMI is in the red, losing 0.7%. And that's because of the tariff announcement. Share prices for Siemens Energy rose after the company said it will hit its 2025 growth targets. Things are a little bit different in healthcare stocks, which are still on edge and slipping as they wait for Donald Trump's new pharma tariff announcement.
Everyone waiting for Trump at this point. Varda, let's look at another top story making headlines there. Over 10,000 European hotels are looking to sue online platform Booking.com for unfair practices. What are the allegations here?
Yes, Laddie, it's 10,000 hotels versus one online platform, and it's a legal battle that's been in the works for many years. Hoteliers in Europe are seeking damages from Booking.com for the last 20 years, so for the years 2004 to 2024. Now, the allegations are that Booking.com prevented these hotels from offering lower prices directly to customers. Booking.com has a best price clause, meaning that hotels could not offer their rooms at lower costs on their own websites or any other portals. The best price would be reserved for Booking. The hotels and the associations representing them in Europe say that this has undermined hotels' control over pricing and violates EU competition laws. The German Hotel Association has joined this 2B class action lawsuit. The case will be filed by the end of the month in the Netherlands.
And what do you think is the likely outcome?
Well, that's what the hoteliers want to know. Their decision to sue is based on a September 2024 ruling from the European Court of Justice that clearly says that price clauses like this one do violate EU competition law. The court's rejection of these kind of clauses in another case sent a signal to hoteliers that they can also demand an end to this. However, the final word will be with a Dutch court. Booking.com obviously has denied these accusations. They say that they only supported hotels. According to different analysts, though, this dispute will have no clear end in the short term, and it could go either way. For German hoteliers, though, there might not be a big win to look forward to. And that's all from here in Berlin today.
Thank you so much, Varda, for giving us details on what's playing out in Europe. Thank you.
Thanks, Laddie.
All right, let's get a check on what's happening with the crypto space. At this point, we did see Bitcoin there trying to make some kind of recovery. 114,000, 0.12% up yesterday at this time. This side was red, that side was green, but that has changed today. This side is in the red now. Ethereum 0.96% down. Solana also down. But we see BNB there. That's a native coin for Binance Exchange. That's in the green, still trying to get above those highs. And some quick headlines now. See, Japanese financial services firm SBI Holdings. They filed their applications to launch 2 new crypto-linked ETFs in Japan. company discloses a move in its Q2 2025 earnings presentation outlining plans for funds that would include XRP, Bitcoin, and gold. And we're seeing outflows there. Bitcoin is still stuck around 140,000, but we're seeing ETF outflows. That's extending between Ethereum and Bitcoin. So we're still seeing price pressure there. Huge amounts that's been wiped out there. When talking about outflows, that's from the ETF. And we'll see top headline there in the market. Michigan State Managed Pension Fund, they've deepened their exposure to Bitcoin by significantly increasing their holdings, and definitely have those companies still buying Bitcoin and Ethereum at this point. But that's how the markets we track are looking at this time. We'll definitely give you more updates tomorrow, and the close, that's for the NGX. That's later on News at 10. Thank you so much for watching. I'm Laddie Williams from me and the team right here at Channels HQ's. Bye for now.